Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock with news that's all about the US Fed today. As expected, the US Fed has raised its policy rate by 75 basis points to 4%. That is their sixth consecutive rate hike and the fourth straight 75 basis points increase, pushing borrowing costs to a new high since 2008. The odds are currently divided between another 75 basis points hike at the December 15 meeting or a lesser 50 basis points rise then, although today's statement tips the chances to the 50 basis points end. Recent economic data has been pointing to an impressively resilient economy, although there are some signs of a slowdown starting to show, especially in the housing market. And of course their inflation is sticky at close to a 40-year high. Of course, this is what new official high interest rates are designed to bring down. Remember, they have an inflation target of just 2%, but the overall resilience, especially in the labour market, is making that a tough task, and there is scant evidence yet that the early sharp rate hikes are making a material difference, especially to inflation expectations. Still, the Fed suggests that it is coming to an end of its series of sharp hikes. American mortgage applications fell again last week, although not as much as previously. In the precursor employment report from ADP, which focuses on the private sector, only delivered a marginally better result for October than expected. They reported a gain of 239,000 jobs last month, the most in 3 months and compared to a market forecast of just 195,000. However, hiring was not broad-based. Despite their extreme inflation stress, the number of Germans in paid work had a new high in September of 45.6 million. However, their labour market expansion is slowing somewhat. Their jobless rate stayed unchanged at 5.5%. In Australia, residential building consent levels fell almost 6% in September from August and are down 13% from a year ago. Meanwhile, lending for housing fell more than 8% in September from August and is down more than 18% year on year. And the price of iron ore just keeps on falling as Chinese demand reduces further. Coal prices are no longer rising, although they aren't falling either. Chinese steel mills are highlighting weak demand, especially from their property sector. And the US Treasury 10-year yield started today little changed at 4.04%, but after the Fed announcement, it fell to under 4%. And the price of gold will open today at $1,648 an ounce. This is up $3 from this time yesterday. And oil prices start today little changed from this time yesterday at just on $89 a barrel in the US, while the international Brent price is just under $96 a barrel. And the Kiwi dollar opened today at 58.6 US cents, and little change since yesterday and a new 6-week high. But after the US Fed, it rose to 59.2 US cents. Against the Australian dollar, we're unchanged at 91.5 Australian cents and our highest since April. And against the euro, we're up slightly to 59.5 euro cents. That all means our trade-weighted index starts today at 69.5 and up 40 basis points since this time yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston.